Welcome to Invested Souls, the podcast where real estate expertise meets relationship growth.
And we're your hosts, the Flanagans. I'm Brad.
And I'm Jamie. This podcast is your chance to learn from our experiences and follow in our footsteps. Whether you're an entrepreneur, investor, or real estate professional, we've got the insights and strategies to help you elevate your wealth and achieve financial freedom.
But it's not just all about real estate. We believe that thriving in life means nurturing the relationships that matter most.
That's right. We'll be talking about how to balance your personal and professional life so you can create a fulfilling and prosperous future.
So join us on Invested Souls and let's grow together in wealth, relationships, and success.
Ready to elevate your life? Let's get started. Welcome to Invested Souls.
All right, welcome to the show. I have Mike Lacy on today, real estate pro in Atlanta, right?
Yes, in the Atlanta area.
Awesome. Real estate agent by day, investor by night, multifaceted, dynamic. If you're not following him on socials, you need to be. But Mike, thanks so much for coming on today.
Thank you so much for having me. I'm pumped.
Yeah, man. I wanted to jump right into it because, of course, I consumed some of your content just beforehand. And I think some of the best advice is helping people lay the foundation. And you brought up, which I loved, the core four. Tell me about that.
Yes. So as a little bit of background, the reason I got into real estate is because I became a finance nerd and a money nerd. So I really got into budgeting and 401k, Roth, like just simple investing stuff. And that kind of slowly led me to real estate. And I came into it with the mindset of I want to find the investing strategy that is most likely to build me as much wealth in as little time as possible. And what I realized with real estate is that it has some advantages that no other asset class has. It's really a laundry list. But the core four that I like to talk about are four ways that a real estate deal, one house, one property, one investment, can generate you four types of returns. And those are, number one, your cash flow. You make monthly profit just from bringing in rent. And this could be Airbnb, this could be a long-term rental, this could be commercial, but you're bringing in monthly revenue somehow. Paying down debt, right? If you use a mortgage to buy a property, part of that monthly mortgage payment is paying down the debt and building your equity. Number three is appreciation. If the property is going up in value, either due to upgrades that you make or just the market going up. And number four is the tax benefits. You get a lot of tax write-offs. They're multifaceted, can get pretty complicated. There's a lot of different types, but you're getting some sort of tax benefits as well. And so it just blew my mind that, when you think about something like gold or Bitcoin, it has one way to make you money. It's got to go up in value. If it doesn't go up, you don't make money. And in fact, you lose money. If you look at something like stocks, you get two ways. It could go up in value and you can receive a dividend. And oftentimes it's one or the other, but let's say you can get both. And when I realized that real estate has these four things working for you, it's part of what makes it so powerful because all those things can add up to a really big return. And it creates a little bit of risk defense because let's say the property doesn't go up in value for a few years. You're still getting those other benefits. Let's say a property doesn't cash flow all that much. You're still getting the tax write-offs. You're still getting the debt pay down. And so those core four are why I think real estate is such a powerful investment. And it's also the lens that I use to evaluate deals. When I'm looking at a property, I want to see what's my cash flow, what's my loan pay down, et cetera, et cetera.
Yeah, man. I think people forget about the amortization gain all the time. And they're just like, oh, yeah, I'm looking at this payment and not focused on the fact that they're gaining the equity. They're maybe negative about the cash flow because it's just not as much as they would hope they would have received, especially Airbnb or covering the utilities. And you're in Atlanta, it's the hot time of the year. People are very frivolous with their thermostat when they're not paying the bill. So you serve investors, correct? Small mom and pop investors?
Not exclusively, but a lot of the clients I work with are either investors or they might be like a first-time home buyer that wants to buy that home and then in 3 years maybe buy another one and keep the first as a rental.
Yeah.
That's a good chunk of my business, yeah.
So I love that. an advocate of those who understand or at least acknowledge that jumping into being a landlord is very difficult to establish a regular income. We'd have to be somewhat financially strong to establish investments that will pay you enough in cash flow to avoid needing to work that second job. Do you see people with that perception, like, oh, I can just go right into being a real estate investor and not do flips? Because I think flips are where you're going to generate enough cash flow to actually sustain a living, but it's also a very active employment if you are only doing that to try to pay your living expenses. What kind of conversations are you having around that, especially with money being a little bit more expensive these days?
Yeah, I think a lot of people, myself included, come in with the expectation that they're going to be able to replace their income pretty quickly. Even like 5 to 10 years can be pretty difficult. Of course, it depends on a lot of things, but if you want to get to $10,000, $20,000 a month in cash flow profit, that takes a lot of real estate and a lot of capital and a lot of equity to do. So I do think that's like a bit of a bubble burster moment that a lot of newer investors go through. But I still think it is one of the best ways to build wealth. And one thing I'll add that took me a long time to realize that I think could help shift people's mindset around this is that if your goal is passive income, if your goal is to have that monthly passive profit coming in, you really shouldn't be too focused on that metric starting out. Like if you go buy one rental and it's making $200 a month, don't get too discouraged about that, because even if that's your end goal, the best way to get there is by growing your net worth, because net worth can always be converted to passive income.
Mm.
So let me just unpack that a little bit, because again, this took me a while to understand. If I have a real estate deal that makes me $200 a month in cash flow, that's not that much. But if over a few years I can build $100,000 of equity, you always will have the option in the future to reposition that equity to maximize your cash flow. So for example, I could sell that property, get $100,000 out, and put it in a high yield savings account, getting 4% returns. That's $4,000 a year in cash flow, right? I could buy real estate with no mortgage on it, and that's also going to maximize your cash flow. So really the goal, the game should be maximize net worth until you get to a million, 2 million, 3 million, and then you can figure out, okay, now how do I optimize on getting the passive income? Because you
Mm-hmm.
could sell everything and take that 2 million or 3 million and go get a 4 to 5% return somewhere. And all of a sudden we're talking about, $80 to $150,000 a year in passive income. And that's real money. So I think the biggest shift that I had to go through was realizing that, okay, yes, the end goal is passive income, but actually the best way to get there is just growing my wealth and growing my net worth. And that's where something like appreciation and debt pay down start to matter a lot more to you than just, I want cash flow, I want cash flow, I want cash flow. You can't jump straight there at the beginning.
Right. And I don't know if it's a bubble burster in the philosophy that I tend to share. I've taken the goal that somebody proposes and then I just 3x it because, as you probably know, depending on who you go to for financing, the best terms are going to come from that 75% or so loan to value. So if somebody's goal is to own $1 million worth of real estate that's debt free, if we set the goal to own 3 million with debt, by the time we get there, we can do just that, liquidate 2/3, and that 1/3 is now going to be free and clear of debt and cash flowing at the best level. I tend to believe in the 1% rule, which is getting harder and harder to meet, right? Like if it's $100,000 property, I want to generate roughly $1,000 a month in rent or gross revenue. That's the objective that I still shoot for today. And typically, if that works, or if that metric can be hit, the numbers will potentially work. Again, every deal is a little bit different, but just like you said, I mean, sometimes people are focused on going and getting something more, when if we just narrowed our focus or really got, what's the word? Precise in where your numbers are at, you can find an opportunity to free up significant cash flow. I'm big on analyzing debt from a cash flow basis because I think more options that I have with my money, the better. Even if I owe more, that's okay as long as I'm minimizing the monthly debt service. And so I've got some that are at like $5 to $6 per month for every $1,000 I have outstanding. You can accelerate that $500 to $600 per month for every $100,000 you have outstanding. But then I have my worst one is $12 per month per thousand. Well, just refinancing that debt, I could free up roughly $100,000 a year in expense, but part of that's my equity. So I gotta be, or my amortization gain. So you've got to really get into the spreadsheet. And I love that you emphasize the fact that being a student of finance, because I think it's ever changing, right? We got to adjust for interest rate, we got to adjust for the insurance, taxes, all that creep that happens in the background if you're not looking at your spreadsheet. So, are you a fan of creating your own spreadsheets? Do you have some templates that you swear by? What's your advice for somebody who isn't yet in the numbers, but really is an effort or wants to make an effort towards getting better?
Yeah, and I think this is a great place to start because we all know that when you go to buy that first deal, you can have listened to all the podcasts and read all the books, but you're going to be a little bit nervous because there's a lot of money on the line and you're not sure if you're making the right call. And what gave me the most confidence was the numbers. By the time I bought my first deal, I had run the numbers on 50 different properties. So I started to tell like, okay, this deal is not worth pursuing at all, this deal's pretty medium, and like, oh, this deal looks really good, the numbers look better than the other 49 deals I've analyzed. So numbers are really, really important. They tell a lot of the story, not everything. Real estate has some other unique elements to it, but the numbers will tell you a lot. When I started out, I used a deal analyzer that I found online. It was a free one that was able to find, and started using it, and it was fine. I ended up buying that first deal just using that spreadsheet that I found. And then after that, once I started to understand better what I was looking at and what was important to me, I did eventually create my own that just felt better to me. So there was a few things I did that actually kind of simplified it, made it less complicated, and let me really hone in on, okay, if I can check these 3 or 4 boxes, I know I like this deal. And if it doesn't check those boxes, I'm probably not interested. And I'd recommend that other people probably take the same approach. Just start by, I'll share mine if you want, and people can use that and play around with it. And then once they get a better understanding of what they're looking at and what they're looking for, they can create their own, especially if they like that type of thing. If they don't want to mess around with Google Sheets and macros, then yeah, just use someone else's.
I love what you said very passively. So I want to highlight it was you operate out of principle with regard to these are the metrics that I want to hit. So for me, starting out, I didn't have a baseline, but I converted a property to a rental and ended up cash flowing $300 a month. I'm like, okay, that should be at least a metric. It seems to work. I'm okay with it, so I'll make that my goal. And now if I need to pay what was my mortgage at the time was $1,500, I'm like, I only need 5 of these and my mortgage is going to be paid for. So establishing metrics and knowing that if your numbers after analysis hit those metrics, there's no reason not to proceed. It's similar to what we do on the loan side, right? If the metrics of debt and assets, monthly payment, cash to close, those metrics are hit, then we have an opportunity to move forward on the purchase. I'm sure when you're representing buyers, if it's got 4 bedrooms and 3 bathrooms and a 2-car garage, that might be what it takes just to get there. So people sometimes overcomplicate it and think that there's some magic in there, and it's really just operating out of principle and then being aware after we execute and analyze, I'm a military guy, so we do an after action review, right? What was supposed to happen, what did happen, what should we sustain, and what can we improve? So very, very cool that you just threw it out there, but I think it's worth highlighting for the good of the group. Tell me about what you're focused on today and maybe what advice you would give to somebody who's looking at trying to take action and break into the market, or maybe just break through those barriers of confidence.
Sure. Yeah, I think I'll answer both those questions, and it kind of relates. What we're focusing on right now is flipping. We've started flipping houses. We bought our first property back in 2019. So we've owned real estate for a while now, and it's done really well for us. We make a good amount. We basically haven't had a mortgage payment since 2019. Kind of like you were saying, once you get enough rental income, you can offset your mortgage. And we've been fortunate to do that since we bought our first property. And so that's gone really well. But as you know, buying rentals, especially in Atlanta, which is not like the cheapest market in the US, can suck up your cash really fast. So, we don't have any outside investors besides mortgages. And so we like to renovate our properties. We put a lot of money into them to really maximize the returns. And, we kind of hit a wall when it came to buying more properties. And so we decided this year that to increase our income, to have more, be able to buy more rentals, we wanted to start flipping houses. My wife is really into design. We've renovated a bunch of our rental properties. And so we thought, we're in the business. I'm a realtor. She's good at design. We have a lot of unique advantages here. Let's get into that to start growing our active income so that we have more money to buy more rentals to get us more passive income. And so to go to the second part of your question about people starting out, my biggest piece of advice is always to run your own race, live your own journey, and do what you want to do. I think the biggest struggle a lot of people have starting out is they don't know what to do or where to start. They've got one person over here on TikTok talking about Airbnb arbitrage, and then they see another person talking about wholesaling and how you need to be wholesaling. I'm making $30,000 a deal. And then another person is talking about house hacking, and they're like, well, it all sounds good. Maybe I'll learn all of it. And it's like, no, that they do all work. The good news is they do all work, but you can't really do everything, right? Like I've never really been a big Airbnb guy. I get tempted by it sometimes. I've analyzed, converting some of my properties into an Airbnb, but it's just not really the business I want to be in. And so I think it's really important to focus on what you want to do and just taking that next step. So again, the reason why we started flipping this year is because it was the next step for us. We needed to grow our active income to be able to grow our portfolio. For someone that's starting out, I think you should start by asking that question. Do I want a house hack, right? Should I buy a duplex or a quadplex and live in one unit and rent out the rest? This is an amazing option for, everyone, but especially if you're younger, if you're single, if you don't have a huge family that needs to squeeze into a 2-bedroom apartment, right? That's going to be a really good fit for that type of person. Maybe Airbnb is the perfect thing for you. Maybe you're really good at creating these unique, curated experiences that are one of a kind, and you can create that design better than anyone else, right? Or maybe you're really good at customer service and you're just going to create an amazing stay experience for your guests. There's medium-term rentals are another niche. You can rent to traveling nurses, right? I have a friend that's a doctor who likes to invest in real estate. And so he bought a property pretty close to the hospital that he works at. He knows a lot of nurses because he's works at a major hospital, and that's a perfect niche for him because it just fits his lifestyle. So I think finding out which of those lands for you, which of them rings true, which of them sounds good, go for that. And don't get discouraged, because there's also going to be people that are talking bad about it. Oh, Airbnb doesn't work anymore. Oh, this house hacking is dead. The BRRRR strategy. There's always going to be people saying you need to do this or don't do that. But follow your heart, follow your compass, run your own race, figure out what makes sense for you, and just get that first deal. Just do that first one, because then you'll figure out the next step once you get there.
Heck yeah, it's definitely a trial by fire. And I would recommend anybody who's in that position, this is the type of agent you need to have. this is the agent that is practicing what he preaches, right? If we as real estate professionals are out there talking about how great of an opportunity it is to buy in today's market, and we're not doing it ourselves, we're just recreating content. But when you're actively participating in it, I think it enhances the level of professionalism, the level of experience that you can bring into the client's transaction. Because we then tend to, even if it's unintentional, treat it like it's our own. Like, you can't help but walk through that property and just be like, I'm not feeling it. Like, doesn't mean that we don't know that somebody could pull something off that we don't believe in, right? I'm the first to say I'm not a naysayer. I'm just, sometimes I know my principles, and if it doesn't fit my principles, I'm like, it's not for me. I'm going to pass on this. But if you see an opportunity, I'm all about doubling down and just putting some logic behind the idea. So absolutely love that. Mike, if you had one place you were going to direct somebody that needed to get in touch with somebody like you, where would you send them?
With me in particular, or someone
Yep.
like me?
You. No, you.
Yeah, I'm an open book. I respond to all my DMs as best I can, so people can get in touch with me. Probably Instagram is best, at
Okay.
Real Mike Lacy. Same handle on TikTok, although I don't check that quite as often. My info's out there. If you want to call me, email me. I'm a realtor. My info's out there. So
Right?
yeah.
Try to sneak you in between the guy trying to sell you insurance somehow. Now, we'll put all your handles down below. I greatly appreciate the wealth of information. I know this is a quick episode. Love to circle back maybe when both of our wives, who happen to be involved in the business, could jump on. There's nothing more fun than two couples who actually work together. It just brings a whole nother dynamic to the conversation. So maybe we put that in the next one.
Absolutely. That
The
sounds great. She's
sequel.
a little camera shy. She likes to be behind the camera. She is a completely invaluable piece of the puzzle, I will say. It's much, much easier, because I know a lot of people talk about, they're like, how do I get started in real estate when my wife or my husband is not on board? And I imagine that can be very difficult. So I'm sure you can relate that we're very blessed to have a partner that is just as into it as we are.
That's rocket fuel. I mean, at the end of the day, if you're out moving in that direction and that ends up being an opposing force, it really can hinder the success of it and the endurance that you have, because sometimes this business just does take endurance. I'm sure that in the flips side of it, you run into something you didn't expect, and the last thing you need is come home and say, I told you so, on top of the issues that we just had to try to figure out and overcome. So,
For
so
sure.
true.
I would say we probably average about 2.5 breakdowns per property. And so it's really helpful to have the other person to pick us back up because, yeah, if you've probably experienced the same, that when you're going through a renovation or a tricky deal or turning over a tenant, it'll happen. You'll have those days.
You sure do. You sure do. And we need to borrow the confidence or the resilience from the other party. So, again, Mike Lacy, Lacy. Check him out, all the socials, but Instagram is where you're going to see him the best. And we will look forward to trying to get him on again next time. Thank you so much for joining today. I'll see you soon.
Thanks for tuning in to Invested Souls.
We hope you found our insights valuable and feel inspired to elevate your real estate and relationship goals.
If you enjoyed the episode, please subscribe, rate, and leave us a review. Your feedback means a lot to us.
Follow us on social media for more tips and updates, or visit bradandjamieflanagan.com. And to find out more about our Real Estate Wealth Accelerator, don't hesitate to reach out.
Until next time, keep investing in your future and nurturing your relationships.
Thanks for listening to Invested Souls.